So we get asked all the time, what are the differences, the main differences between the fees or the rates between an online loan and a factoring facility? And that's a great question because they are very different. First of all, an online loan is exactly that, it's a loan. And they operate in two main ways. First of all, you can have a loan that's pegged to your future credit card receipts. And that way the repayment comes through the merchant processor who will take an agreed percentage of all the credit card receipts that go through your account. So instead of getting that flow back to your bank account, they'll keep a certain amount back. Another very popular way is what's called an ACH repayment. And that can be a daily, a weekly, sometimes a monthly, but more commonly daily or weekly debit to your bank. It's through the ACH system, which is an online payment mechanism, usually next day. So again, it's a repayment that's constantly being taken out of your account, a daily or a weekly or a monthly amount, and that's the repayment that you make. So oftentimes the rates will depend on how you're getting repaid, how quickly you pay that back. And the loans will be quoted as an interest rate dependent on the amount you borrow and the length of time that you take that loan out and repay it over. So always have a look at the small print because, again, you have to make those payments. If you don't, you'll fall into a default very quickly. But one thing to bear in mind is that with the repayments that you have to make, it can really damage your cash flow. So if you've got a daily amount coming out of your bank account but you don't have the funds there to meet it, you could have a problem. Or you're expecting a certain amount to be in your account and all of a sudden you find you've forgotten about that repayment that comes out on a Friday and now you're short of cash when you've got to make payroll. With factoring, you will find it's not a loan. There's no repayments to make because a factor will advance funds on the receivable and they will get repaid by the customer. So the person that you've delivered the goods to or performed the service for, that you've issued the invoice, will actually make the repayment to the factor. And so you don't have any repayments to make. It is an advance on your receivables, so it's still a financial facility that helps you grow, but you don't have to worry about making those repayments. It just happens from the payment of your invoices. And a factor will typically advance 80, sometimes 90% of the invoice value to you. So it's really like getting paid within 24 hours instead of getting 30 days or 45 days credit and waiting for your customers to pay. So it will really enhance your cash flow without the worry of having to make that daily, weekly or monthly repayment on the loan.